Today we are looking at advanced micro devices, ticker AMD. The question is simple. Is AMD the better AI chip opportunity because it is the challenger, or is the market already pricing in too much of that upside? My short version is this: real AI upside, not exactly a cheap entry. By the end, you will know my fair value range, the price where I would get more interested, and the three numbers that decide this AMD thesis. $34.6 billion of revenue, $6.7 billion of free cash flow, and 2.65 of diluted EPS. This is not financial advice. I'm using the numbers for education and research. If you're building a watch list instead of chasing headlines, subscribe to FinanceToGo for plain English stock analysis, fair value ranges, buy zones, bull cases, bear cases, and value trap checks. AMD matters because it is not just a normal PC chip anymore. The company has ePYC server CPUs, Ryzen client chips, gaming and embedded exposure, and now the big question: can Instinct accelerators become a serious AI growth engine? The simple investing tension is that AMD is one of the few credible alternatives to Nvidia at scale. That is valuable, but being credible is not the same thing as already winning the profit pool. Investors still need proof that AI accelerator demand turns into durable margins and cash flow. The latest filing snapshot was AMD with $34.6 billion of revenue, $4.3 billion of net income, $2.65 of diluted EPS, and about $6.7 billion of estimated free cash flow. That is a real proof stack. AMD is profitable, cash generative, and the balance sheet has more cash than long-term debt. So this is not an AI story with no financial foundation. The catch is valuation. At around $467, the stock already assumes AMD can turn AI demand into a much larger earnings base. Good results are not enough. The company has to show that the AI ramp is becoming margin expansion and free cash flow growth. My FinanceToGo score is 7.1 out of 10. AMD scores well on growth, balance sheet, cash flow, and momentum. The lower score is valuation, because the stock is not giving investors much room for disappointments. The business is not the problem. The price and proof are the debate. AMD can be a strong AI infrastructure company and still need a better entry point. The price chart shows that investors already recognize AMD as part of the AI infrastructure trade. That can be a good for momentum, but it can also mean that the bar is higher. For me, the next question is whether the numbers keep catching up to the stock price. My fair value range is roughly $330 to $430. My buy zone is lower, below about $300 to $330. At the current price, around $467.51, I see a quality AI story, but not a clean margin of safety setup. I'm not trying to get everything down to the exact number, but I'm trying to see whether the current price gives enough room for the risks. In the bear case, if AI accelerator growth disappoints or margins fail to follow, the fair value could be closer to $220 to maybe $300 in the base case. AMD deserves a premium challenger multiple around $330 to $430. In the bull case, if AI profits accelerate, $500 plus becomes easier to defend. The bull case is that bears are underestimating how important a second AI accelerator supplier can be. Hyperscalers want competition. AMD has credible products, and the company already has relationships across CPUs, GPUs, and data center platforms. If Instinct accelerators keep scaling, AMD's earnings power can move higher than a normal PC and server chip multiple would suggest. The balance sheet also gives AMD room to keep investing while the AI opportunity develops. The bear case is that bulls may be paying for AI share gains before they are fully proven. Nvidia still has the stronger ecosystem. Custom silicon from large cloud customers is a real risk, and AMD still has cyclical exposure in clients, gaming, and embedded chips. The thesis breaker is simple. If AI revenue grows but margins and free cash flow do not follow, the stock can look expensive even while the story sounds exciting. My FinanceToGo verdict is the following. AI Challenger, premium price, and AMD belongs on the research list, but I would not call it a clean buy zone stock at the current price. The thesis improves if data center AI revenue keeps scaling, margins expand, and free cash flow strengthens. The thesis weakens if AMD remains the alternative supplier without enough profit leverage to justify the premium. The reusable investing lesson is simple. A real AI winner can still need price discipline if the market already prices in the upside. If you want more stock breakdowns like this, subscribe to FinanceToGo and comment below. Would you rather own AMD as the cheaper AI challenger or stick with Nvidia until AMD proves more AI profit leverage? Again, this is educational content only, not financial advice.